What's up, everyone? It's Caddy with Money Investing. Welcome on board for another Market Open live stream here. So we've got another brand new day. QQQ here, more or less flat, just down about 3 basis points at the moment. We've got the S&P 500 ETF also flat right now, and the Dow Jones also just not really moving at all, only down 4 basis points. However, the 10-year yields are really on the move. They are up 1.28%. ahead of quantitative tightening. So September 1st is when that's going to begin. Let me know in the live chat if you guys can see me and hear me. Just want to make sure that everything is working well and the audio and the video is coming through nicely. So just let me know in the live chat and we should be all set and ready to go. And also make sure that you also vote to the poll and give us your prediction whether you expect the markets to be higher or lower today or more or less is flat. So let me know in the live chat if everything is working well. Perfect. Good morning. Thank you so much for joining, everybody. Again, happy to have you on board, and we are ready to go. All right, so going over to the earnings, Intuit reported numbers yesterday after the bell. I already went over their numbers, did a complete video, complete analysis on them earlier today. So if you want to check that out, there is going to be a video in our playlist, Stocks Under 30 Minutes. And then, of course, later today, we've got NVIDIA, we've got Salesforce. Did both of those videos earlier in the week. So I've done videos on NVIDIA and Salesforce prior to the numbers coming out. And then Snowflake reports after the bell, Autodesk reports after the bell, and of course, Splunk also reports after the closing for today. And then Peloton reports tomorrow pre-market, but Peloton is already pushing higher on their partnership with Amazon. So Amazon and Peloton have struck a partnership, and Peloton will be able to sell their Peloton bikes and other accessories and their stuff on Amazon from now on. So for those reasons, obviously it's pushing higher, 15%, very nice jump. But then Dollar Tree, Dollar General, Affirm, Marvell, Ulta, Dell, all these companies are going to be reporting later this week. Today we did have mortgage applications, which declined 1.2% on a month-over-month basis. GDP comes out tomorrow at 8:30 a.m. Eastern, so tomorrow's live stream will start earlier at around 8:15 a.m. Eastern. I'll be live to go over the GDP numbers and the jobless claims, and this is going to be that second estimate for the second quarter GDP numbers, which again are going to be very important. We get 3 estimates for every quarter, and right now we're kind of pegged at negative 0.9%. That's going to be the same as what we got the last time. So, if you do get negative GDP for the second quarter, if you already got the first quarter also negative GDP, that would mean 2 official consecutive quarters of negative GDP. And then, of course, it'll be up to the National Bureau of Economic Research, NBER, and the officials from that sort of economic research team to really tell us whether we're in an official recession or not, or if the definitions, whatever definition they're using that week, so it'll be different. Jerome Powell is also going to be speaking on Friday, August 26th, and that is going to be at 10 a.m. Eastern, so I will be live to cover that as well. And Morgan Stanley says cash is king for investors' portfolios right now. So for the last 12 years or so, holding cash in the portfolio was largely seen as an insurance policy, a way to get through tough times. That view is no longer accurate. According to Morgan Stanley, not only is cash no longer a drag on portfolio yields, given where bonds stand, it's slated to perform better than many other asset classes, and it offers higher current yield, it offers liquidity, and it offers better 12-month total return than our strategy forecasts imply for U.S. equities at the moment. So pretty much you're not inflation adjusted. Morgan Stanley is saying they're going to be losing more in equities versus just holding in cash. So President Joe Biden is expected to announce his decision on the student loan forgiveness soon. So I know that Oscar's been talking about this in our Discord all morning, potentially as early as Wednesday, so today, and citing multiple sources reported that Biden is expected to extend the pause on the student loan debt repayments while forgiving loans up to $10,000 for borrowers with yearly incomes of less than $125,000, and that likely won't be enough to satisfy advocates for slashing student debt, which totals more than $1.7 trillion in the U.S. Now, I know there's a big political heated debate, whether this is the right thing or the wrong thing to do. I'm not going to get into that, but this is obviously going to affect some of those fintech companies like Sofi, some of the other more traditional banks as well at the moment. So Moving forward, we've got some mortgage demand. So mortgage demand is still weak, but a surprising sector of the market showed signs of a comeback. Applications for government-backed loans with lower down payments rose 4% last week, and that is potentially a sign for more first-time home buyer activity. And housing inventory has been long been tight, particularly at the lower end of the market, but demand among higher income home buyers has softened a bit, and the average size of home loans has also declined a little bit. So one of the biggest sellers on Amazon is preparing to liquidate. So this was something that I think they also mentioned in their earnings call, if I'm not mistaken. So the company called PharmaPacks, a seller of health and personal care products, was the top U.S. seller on Amazon. Its parent company, Packable, was also getting ready to go public via SPAC. I think this was back in 2021. And now Packable is laying off employees after it failed to find a lifeline from lenders, and the company benefited in the early days of the pandemic. But revenue growth has slowed down in recent months, and a broader supply chain issues have left it with several items out of stock. So it's crazy how quickly the world changes. And up until last year, the company was very successful, strong revenue growth. They were ready to go public, and then 1 year later, they are on the brink of bankruptcy here and preparing to liquidate. So pretty crazy here. And Peloton obviously strikes a deal to sell fitness equipment and apparel on Amazon. That's one of the reasons why the stock is pushing higher right now. It's up over, I think, 15% or something. Now it's up over 8%. So it actually got a very significant increase right when the news came out. So it actually rallied all the way up to $13, $14. It's now back down to just a little bit over $12 at the moment. So Peloton has struck a partnership with Amazon in a bid to broaden its customer base and win back investor confidence as revenue slows from the pandemic highs and its stock price plunges. In its first foray outside of its core direct-to-consumer business, Peloton, starting Wednesday, will be hawking a selection of its connected fitness equipment as well as accessories on Amazon's website in the U.S. There was another really, really interesting stat that was shared by the company, and that was that over 500,000 searches happen on Amazon for Peloton. So that's almost 500,000 potential customers that they can tap into in the future. So that is a very, very significant amount of customer base that they can certainly, get access to if they are going to be on Amazon. So I think that is definitely a little bit of a better catalyst for Peloton, for all the Peloton bulls. If you're holding it, if you're trading it, obviously this is big news for this stock. So Bernstein reiterates Amazon as outperform. Morgan Stanley resumes Frontier as overweight. So just again going over some upgrades and downgrades. Bernstein reiterates Tesla as market perform. They had more to say about Tesla, which I'll get to in just a minute. And Piper Sandler reiterates Beyond Meat as underweight. And they basically cut their price target down to $9 a share from $12. And Beyond Meat right now is trading at $26 a share. So they pretty much see a lot of downside for this company. Right now it's down 35 basis points, but their price target of $9 pretty much implies potential downside of close to 64-65%. That's pretty crazy. JMP reiterates VICI properties. So they best-in-class portfolio of compelling companies, compelling portfolio of 43 casino properties across 15 states. I've actually yet to do an analysis on this company. I know that I have been very interested in this stock as a real estate investment trust. I already own Realty Income Corp, which is more in the sort of like Target and BJ's and Walgreens and some of those companies that they actually own in their portfolio. But I know that this one is particularly in the casino sector, which I'm going to be doing some analysis on very, very soon. CFRA downgrades Advanced Auto Parts to hold from a buy, and we got GMP reiterating Meta and Uber as market perform, and Morgan Stanley reiterates AT&T and T-Mobile as overweight, and Rosenblatt downgrades Twitter to neutral from buy after the whistleblower event and the complaint against Twitter and the spam accounts. And Citi reiterates Nvidia as a buy. Nvidia reports earnings later today for, I think it's second quarter fiscal 23. And then shares of Tesla are too high despite tailwinds from the latest climate bill, Bernstein says. So this is a little bit of a further report on what they already mentioned in their reiteration. So they basically said, while Tesla shares have topped nearly 16% this year and more than 20% from their highs, toppled, not topped, toppled, basically came down. Bernstein believes the stock price does not support a strong risk reward going forward, and Tesla's valuation is higher than all other major automakers combined and appears to imply huge volume and industry-leading profitability going forward, which is historically unprecedented. And we believe the risk reward at current levels is not attractive for longer-term investors, and the firm retained its $450 price target on Tesla, which implies that shares could plummet more than 49% from Tuesday's close. So that pretty much wraps up all the upgrades and the downgrades. Just some updates here on the markets as well. But Nvidia here flat, Apple just up over 0.5%, Amazon just up over 28 basis points, Tesla's pushing up to almost $900, just a little bit over 86 basis points. And volatility here was higher, so it was trading as much as 24.86, so almost 25 levels. And right now we're starting to see VIX come right back down, now in the red, down about 1.29%. And then we've got Bitcoin just hovering around 22,000, and Ethereum also just at 1650 to as much as 1660 levels. So it's consolidating sideways, validating that support at 1550. So that's where we are. The 10-year yields are very interesting. They are, or they have been pushing higher quite a bit. So in the last couple days, they have just been on a very, very nice, consistent rally. They've gone from 2.5% to now back over 3%. That's a 22% move. And as a result, TLT might be struggling a little bit. So it has gone down after hitting that resistance at $119, $120. So this right here was that resistance for TLT, and right now we're starting to sell right back down. Next support at 108 for TLT at the moment. Now, the interesting thing is that this is happening right, when we are starting to get a little bit more concerned with quantitative tightening from the Fed starting September, when there's going to be a lot of maturities for U.S. Treasuries and mortgage-backed securities. So the longer-term yields, the 10-year yields, I wouldn't be surprised if they continue to kind of creep up higher in the short term right now, as we kind of power through this roll-off process from the Fed and their balance sheet, and the total assets continue to kind of shrink from the balance sheet. So let's take a look at our poll here. Let's see where we are. Let's see where the sentiment is. So right now, 40% expecting the markets to be green, 35% expecting the markets to be red here today, and 26% flat. So I think that's been kind of like the whole sentiment, right? I mean, the markets are flat, literally flat, right? We're not going anywhere. QQQs up 7 basis points, the SPY up 6 basis points, the Dow pretty much 0.00%. And the sentiment also with our polls and everything is just, really just not there. Like, there's a lot of indecision, and everybody's just expecting consolidation, right? Consolidation prior to the GDP numbers and prior to the Fed speech, right? Jerome Powell's speech on Friday at 10 a.m. So it's kind of like that calm before the storm, if you want to call it. That we're just consolidating sideways. Yesterday also the markets didn't really move all that much, so only down 8 basis points. S&P was down 24. So in the last 3 to 4 days, what we have really witnessed is, and I also mentioned this in our last week's live stream and right when the earnings season pretty much got winded down, is that it's gonna get really boring really fast, right? Those were the words that I used, right? It was gonna get really, really boring because we don't have a lot of things coming up. And in the last couple days, Friday and Monday, right, those were the 2 days when the markets really started to sell off on literally no catalyst. There was nothing that warranted that sell-off from the markets, right? So if you come over to this chart, in 2 days, we have seen the markets sell off. So from Friday, Monday kind of included, it's down over 4%. And then if you take a look at QQQs, it is down a little bit over 5%, right? So from those highs, we're down over 5, almost 6% actually in the last 3 to 4 days. And there's not really been any catalyst for the markets that warrants this type of move. So in my view, I think this has mostly been a technical driven sell-off where we talked about the risk reward trade-off. We've talked about the unfavorable conditions and how overbought and overextended we were. And now we're once again kind of starting to get a little bit exhausted on the selling side. Yesterday was lots of consolidation again, right? So that momentum kind of slowed down after 2 days of really brutal selling. So if you take a look at the 4-hour chart on the QQQs, we are really oversold. I mean, we are now at 30, under 30. And just a few days ago, last week, we were at, when we were trading at 332, 333, we were at 69, almost 70 RSI, right? So we literally just went from an overbought level all the way down to oversold in a matter of 2 to 3 days. And we haven't really been oversold, especially not this oversold since the low from back in June, right? So every time we got these dips, I don't know if I marked these. Okay, so every time we got these dips over here, let me just change that color. So over here, we got that dip. Look at where the RSI was, right? Not below 30. This right here was another dip that we got. Look where the RSI got down to, only 38. This right here was another dip that we got. The RSI only came down to 41. This right here was another time, very small dip. RSI came down to 46. And all these times, it was just coming down from an overbought level. So this is the first time in a very long time since like June 16, June 17, that on the 4-hour chart, we have now become really oversold. And the momentum, the selling pressure is starting to kind of exhaust itself a little bit after yesterday's consolidation. So I wouldn't be surprised really to see a little bit of a shorter term bounce here for the markets. 318 still going to be that resistance for QQQs all the way up to 325. And of course, support level that I'm really paying attention to, 307, that's going to be on this chart. But if you take a look at the QQQs over here, there's going to be another one. Watch, we're sitting roughly at 313. That's more like a pre-market support and a support from yesterday, and a level that we have also somewhat validated in the past, back from first week of August all the way down to $308, $307 per share for the QQQs. So $307, $308 is pretty much in line with this, previous resistance to watch. So yeah, that's going to be the pre-market update here. We got about 27 minutes left for the markets to open. If there is anything exciting going on for any specific stocks, I'm happy to take a look. Peloton, Intuit, we've already covered those companies. So Intuit is up 5.7%. It was higher much more than that, but right now it's starting to pull right back down pre-market a little bit. So Awinsky, you can find the earnings calendar in our Discord. You should be able to see that in the market updates channel. The earnings and the economic calendars are usually shared over there. So Mohit Kadi, would you anticipate technical levels to have a dead cap bounce, and what narrative would invalidate that and instead truly reverse it apart from your notes in Discord? So yeah, from a dead cat bounce standpoint, for the reasons that I just mentioned, very, very oversold. Once again, we are on the 4-hour chart. The daily, we're not quite there yet. On the dailies, we're just down to 48, so we're just very neutral, coming off from overbought levels that we were just a few days ago, just from last week. So yes, XPeng will take a look. XPeng reported earnings. They're definitely selling off quite a bit. I think they were down like 12%. We'll take a look at that in just a minute. But QQQs, like I said, oversold right now on the 4-hour chart. So a short-term bounce is something that's still on the table right now. But Friday's speech from Jerome Powell is, if he continues to kind of hammer home on his take of an aggressive monetary policy stance, and interest rates are going higher, believe it. You better believe it. They're not going to hesitate. Whatever he says, whatever guidance he gives us. Obviously, he's not going to go into too much detail, and we may not even get like a full, color on interest rates, because again, that's going to be a little bit of a different speech. There's a different objective there. But if there's any notes or anything that the market anticipates that the Fed is still going to be aggressive, 75 basis points for September, possibly even 50 for November, and much more than that in December as well, to continue to push higher interest rates in their neutral level, then that I think is not going to be great for the markets in general, because this rally was kind of built on the back of the Fed pivot, right? If you think about it, the logic behind this rally was primarily driven by inflation coming down and the Fed, many people anticipating, the markets in general anticipating that the Fed might pivot. And if the Fed doesn't pivot, well, guess what? Then we're back to square one. And, we could start to see a little bit of unwinding for the markets once again. But getting us down to that June 16, June 17 lows, as I mentioned in my yesterday's live stream as well, it's going to take a lot of firepower, especially from the sellers and from the bears, to get us down there. Although it's not impossible, it's certainly a possibility, but it's gonna be a very low probable outcome in my view at the moment right now. All right, so yes, XPeng, let's take a look. What time does Powell speak on Friday? So 10 a.m. Eastern. We will be live to cover that as well when he speaks. So I will be listening in, and we'll be taking a look at the markets. Yeah, Kevin says, any thoughts on Aunt Kathy selling Nvidia? Yeah, that's really weird. I really never understand her trades. Like, I mean, I can't possibly just make sense of anything, Kevin. I'm sorry, man. I just like, didn't she just buy just a few weeks ago? Like, didn't we just get news about her buying a few weeks ago, Nvidia? And now, was there like different ETFs that she was buying versus selling, or like, yeah, I can't make any sense of any of her trades. So I'm sorry, but yeah. So Powell speaks on Friday, 10 a.m. Eastern. We'll be taking a look at that. So Ring Central is on all-time lows here, even after better than expected earnings. What's your take on RNG? So let's take a look at RNG, then we'll kind of circle back to SoFi. So Ring Central here, wow, selling off significantly, quite a bit. So pretty much if you go over to the weekly chart here, it is down from $449. Wow, this stock is down over 90% from its all-time high. So what does this company even do? So Provision Global Enterprise Cloud Communications and Collaboration Solutions, provide single user identity across multiple locations and devices including smartphones, tablets, PCs, desk phones, all that stuff. Okay. Down 77% year to date. Revenues have been growing nicely, but profitability is expanding and in terms of losses. So they are generating wider than expected losses. So yeah, I mean, revenues are good. It's not like the revenues are terrible. I mean, they've been pretty consistent too over the last 4 quarters. And annually speaking, I mean, the revenues have been going up. It's been in the nice right direction. So let's take a look at the margins. That's what I'm interested in. So right now, we've got gross margins at 67%. And we have discussed this, right? Gross margins at 67%. Net margins is minus 32%, meaning that they're spending a lot of money on operating expenses, right? This is going to be your research and development. This is going to be your general administrative expenses. This is going to be your salaries and wages and marketing expense and all that stuff. They apparently are spending a lot of money just by looking at those 2 metrics, because gross margins are good, 67%, but the net margins are negative 32%. So that's not really good. Price to sales really low, 2.3 times, but then price to free cash flow trading at over 19, almost 20 levels. Looks like they have increased their share counts, but not by a whole lot. 71, 72 million gone to over 94 million. This is an interesting company. I mean, this is something that is interesting. From 2014, they actually rallied over 4,500% before falling over 90%. So I'm going to add this to the watch list for now to see if I can actually do some analysis in the future. So yeah, thanks for mentioning this, Lucky. I will definitely do some more research on this company. All right, let's take a look at SoFi. Lots of conversation on SoFi, up almost 8%. Here we go. Very, very strong move for SoFi on the back of whatever that announcement happens today from again, the Biden administration for student loans. Yeah, so SoFi stock fans should brace for a big student loan update. So SoFi is in focus after Education Secretary Miguel stated that Biden administration's decision on whether to extend the student loan moratorium will be announced this week. And the current deadline for the moratorium falls on August 31st and was first enacted during the midst of the pandemic in March of 2020. And over the weekend, Cardona explained that we know August 31st is a date that many people are waiting to hear something from. We've been talking daily about this, and I can tell you the American people will hear within the next week or so. So yeah, that is going to be obviously a big catalyst for SoFi. And right now pushing up almost 8% back up to $6.66. So resistance is going to stay put at close to $7.17 right now. Lucky, don't confuse me with Kathy Wood. That's Kathy, I'm Catty. Katty. So Kevin says so far to the moon. Yes, love it. Tattooed Chef also had a big catalyst. It's up over 6%. Surprised nobody's mentioned that right now. Anybody know what the catalyst was for Tattooed Chef? Big expansion, right? Big expansion for Tattooed Chef into Walmart. So Tattooed Chef expands retail product distribution with Walmart. So they're basically going into Walmart, 2,000 Walmart stores. That's up from 300 stores and increasing their stock keeping units or SKUs pretty much, which is different products that they have to sell, to 13. And when it comes to the company also said it has acquired some assets from Desert Premium Group for about $10 million and locked in a lease deal for an 80,000 square foot manufacturing facility in Albuquerque, New Mexico, where the assets acquired now operate. And Tattooed Chef now expects the new facility operations to be cash flow neutral through 2022 and to move to earnings by early 2023. So that is something going to be very, very good. And they're also looking to consolidate distribution activities to capture added economies of scale. So of course, only time will tell how this all plays out, but that is one of the catalysts why it's pushing higher here. Right now, up over 7.66%. I think margins are really, really important for Tattooed Chef because 1% margin, gross margins is really not going to cut it. That simply means that they're selling the product at cost, right? Having a 1% gross margin is like almost selling at cost, right? So they definitely need to expand that to 10, 20, 15, 30% possibly in the future as economies of scale kicks in for them, and then get down to profitability, earnings and operating margins, stuff like that. So yes, let's take a look at Tesla. So Tesla is going to be splitting tomorrow, and tomorrow, well, they're going to be trading at roughly, given today's price, they're going to be trading at almost $300 a share. So right now, $896, you just divide that number by 3, and the share count will also go up from 1 billion to over 3 billion shares. So tomorrow they will be trading on a split adjusted basis, and then after the closing date today, people who are shareholders of Tesla will receive the additional 2 shares for the total of 3. So resistance right now is going to stay put at $955. So that right there is going to be that level to watch for the company. And of course, support level stays put at 775 down to 625 right now. And yeah, we'll have almost all FANG Mint stocks trading roughly in the $100 to $200 range. All FANG Mint stocks like Meta, Apple, Amazon, Netflix, Google, Microsoft, Nvidia, and Tesla, AMD, all the stocks that I just mentioned, all large cap tech pretty much, will be trading between $100 and $300 a share. All of them. They've all done splits. Microsoft's not. Google has done split. Amazon, Apple, Tesla, Nvidia. 5 stocks have actually done splits in the last year, right? It's pretty crazy. So yeah, all of them will be trading between $100 and $300 per share. Kevin says that Tesla phone was very, very real. Dude says Tesla video 2 days ago, cat's down to $140 fair value. Yeah, so whatever that number was, you just divide that by 3. I think it was like closer to 150 or something in intrinsic value. And again, the PEG ratio was at 0.88. I can maybe even go with a little bit of a higher multiple, and that would bump up the fair value to maybe 175 or closer to $200 on a split adjusted basis. That would mean like, at least $100 drop from 300 down to 200 for it to come down to that intrinsic value. So yeah, that was that number. Yeah, NEO, let's take a look. Let's talk about XPeng now. So XPEV, they reported their earnings. Wow, so they're only down 40 basis points. Okay, so they dropped yesterday 10.8%, and then pre-market right now they're not really moving. So they're back to this very, very important support where pretty much this has been the range for XPeng for such a long time, really. And right now we've just been, consolidating sideways. So back in September of 2020, we had XPeng trading at these levels and a huge spike all the way up to $69, $70. And then since we have just been consolidating sideways, and we have kind of bounced off of these levels a couple times, right? So we bounced off here, and right now we're just back inside this support level once again. So very, very strong area of support. XPeng is hitting once again, sitting roughly at under $20. But earnings looks like they reported a wider than expected loss. Revenue was a beat, and I think the delivery guidance was also a little bit shy of what the expectations were. So they reported 43 cents per share in loss per share, widening from about a 1.38 renminbi loss per ADS a year earlier. Revenue was 7.44 billion, up from 3.76 billion. So that's really good. It's over 100% growth year over year. And analysts were expecting 7.42, so beat on revenue, but a miss on earnings. And then for Q3, the company expects revenue to be in the range of 6.8 to 7.2 billion, compared with the analyst forecast of 10.49. So it's a pretty big miss there on the revenue guide. So 10% down yesterday, trading now at support, oversold very much on the RSI and the MACD. And let's take a look at NEO. Yes, so Kevin, we did talk about that. We talked about the Peloton Amazon deal earlier during a market update, but NEO's got a resistance roughly over here, sitting roughly between $20 and $24. This has been a very, very strong area of resistance for NEO. and it's just been getting rejected at that level. Support level is going to stay put at $12, $13 at the moment. Not sure why Caddy posted the poll. I'm always going to vote green. That's great. So let's take a look at where we are. 43% now. Guys, by the way, make sure that you drop a like. Only 72 likes. What's up with that? So make sure that you drop a like and, of course, subscribe if you haven't already. But 43% expecting the markets to be green today, and then 34% expecting the markets to be red. So that's a bit, again, it's been very much of an indecision type of days, right, in the last couple of days, except for Friday and Monday, which, you know, was mostly boosted by a technical sell-off. In my opinion, we have mostly been in a state of indecision for the markets. So just a few more minutes and we'll end the poll, and then we'll get ready for market open here. We've got Tesla up over 68 basis points. We got Nvidia down 18, Apple's up over 31, although selling off pre-market, and we got Amazon up over 15 basis points. So on a more shorter term time scale, like I said, on the 4-hour chart, you know, we got the RSI that's oversold. But if you come over to the daily time frame, we're very much neutral, right? We're not quite overbought or oversold, but we have definitely come down from from an overbought level. So $308 is really what I'm watching next for QQQs. Even on this chart, if you come over to the 30-minute time frame, we've got one support at 313 that, you know, it's just been validating pre-market. It's just been trading sideways. If you come over to the 5-hour chart, you know, it's just been trading sideways at $313. So this level, there seems to be some buyers present here. But if that support level gets taken out, then $308 is going to be next. And that's going to be a potential, 1.8, 1.9% downside from where we are right now, which at this point in 2022, if you're still watching, if you're still investing, it's pretty normal, right? In the future, the one thing is for sure, these 2 to 3% down days for the NASDAQ is really not going to bother us, right? Because, we've been through worse. I actually have a screenshot of the market. Let me see if I can pull that up. All right, let me see. So go over to August folder. So this right here is a screenshot that I've actually kept from one of the days in 2022. This was one of the days in 2022, just as a reminder, what can happen in the markets. And, this is always good to kind of look at what you've been through, and these are the type of days that you've kind of been through. I always also look at, how the markets were back in 2020, back during the pandemic and the COVID crash, and much, much worse back then than what we have over here. But yeah, always a good reminder, the markets can really be brutal sometimes, and at no fault of your own, at no specific reason. It's just, one of those days. It's just a Wednesday, but the markets can be like this, where not a single stock, you can't find a single stock on this heat map. Maybe a couple, maybe one stock, which is CME. What is that? Is that Chipotle? I don't think it is, right? Yeah, no, CME Group. Yeah, so that one was the only one that was slightly higher, but everything else, all sectors, all stocks, and these are not just small drops. Like Tesla on that day was down 7%, Amazon 5.5%, Google 4%, Meta 6%, Microsoft 4%, Apple 3.8%. So just a good reminder for everybody. Beautiful, Oscar says. Let's see. So Jessica says, why are we still with the red microphone? Because we agreed as a community, I think we all did, that the red mic gives us opportunities. And I'm pretty sure everybody wanted me to keep the red mic, so that's why we have it. And yes, that is the actual truth. No, but the green mic will happen. Will come. It will in the right time, right? So we don't want to make the green mic curse too, right? So we want to start fresh. Kevin says BS. All right, let's get ready for the open. So again, I'm going to switch over to the indices now, and we'll open up some charts, individual charts as well. Green mic in 5 years. So Dow Jones closed at just under 33,000. The NASDAQ, you'll notice the last 3 days we've just gapped down and then traded sideways. In some cases, gapped down and then sold off. And yesterday we pretty much, the day before we gapped down and sold off. And then yesterday we just kind of like gapped flat and we just traded flat. So lots of consolidation sideways. And then of course for the S&P as well, 41.28 is going to be that level. For SPY, Saren, so the level that I'm really paying attention to right now is going to be 410. 410 is going to be that level intraday to really pay attention to. But if you do start selling off a little bit more aggressively, then $400 would be that psychological support, considering that we have found resistance here in the past. $399, $400 would be that next level that I would be paying attention to for SPY. But right now 410 on the day, and then 313 on the Qs, all the way down to 308 for the Qs. So when do you see this recession hitting? Elon says it will last 18 months. Do you agree? So in terms of recession, in my view, I think there might already be one, considering the GDP numbers. And it's just some of those lagging indicators haven't really picked up yet. Unemployment, wouldn't be surprised if that starts ticking up higher as well. Right now we're sitting at a 50-year low, 3.5%, but something's got to give, right? Eventually something's got to give. You can't just keep raising rates month in, month out and expect nothing's going to happen, because eventually things will happen. So if the Fed keeps raising rates, if you get up to almost 3.5%, close to 4%, and if they continue to raise rates, or the probability for us to see more hikes in 2023 continues, and I wouldn't be surprised if, by Q4 of this year or early next year, unemployment really starts to kind of push higher as companies starts to kind of lay people off, and we see cuts across the board. So my conservative estimate would be by the end of this year or early next year, if the Fed continues to be very aggressive on interest rates, because eventually something has to give, right? You can't, like I said, you can't just keep raising rates without something breaking, right? So Arnold, I want to know your new Tesla share count after the split. So share count is going to go up to over 3 billion, right? So right now they're sitting on just over 1.03 billion shares. You just multiply that number by 3, and they're going to be sitting at well over 3.09 billion shares after the split on an outstanding shares outstanding basis. So, Søren, how big of a drawdown on QQQ would you guess this time, looking in to initiate new long positions? So, in general, in general, are you asking like from total, like on the year, or just like at the moment, right? In the like this week or something, like the pullback that we've started to see. So, Arnold, is there a question? Are you asking? I want to know your new Tesla share count after the split. All right, this year. So it's kind of hard to say, but again, probability wise, when we hit that 20% threshold for the markets, when we hit that bear market threshold, as I mentioned before, the probability for us to get down there is very, very rare, right? It's a very rare occurrence for the markets to be down there. For the S&P 500 right now, it's only down 13.4% on the year. And then of course, we're down a little bit over 14% from all-time highs. But when we get down to 20% or more, then it gets down to very, very rare occurrence for the markets, where it's good to start initiating long positions. And if we do get down to 20% or more once again, then I will be a little bit more aggressive again to start nibbling in, and then start dollar cost average my way back in to the markets with whatever cash I have at the moment. So Ring RNG, I will be doing an analysis very soon. We did some research on that pre-market here, but we will be taking a look at that company in more detail in a more separate, more detailed video. So I'll add this to the list. Yes, Sofi pumping a lot. It was up like 7 or 8% last time I checked. Now it's up over 8%. So very, very nice move. Again, today we're going to get some news on the student loan forgiveness and whatnot. So that is definitely going to benefit Sofi greatly. All right, so we're going to end the poll here. 305 votes. I'm happy with that. 42% green. And we've got 35% expecting red and 21% expecting the markets to be flat. So here we go. So Emily, my take on Meta, I've already mentioned several times. I've done videos on them as well. So, god damn it, this stupid power. But yeah, we've already talked about this. Listen in on the earnings call as well. So make sure that you do check out those videos if you haven't already, on the fundamental analysis, on the earnings call, transcripts, all that stuff. But long term, I remain bullish on the company. The fundamentals, the numbers are phenomenal. Last year's revenue growth and earnings growth was over 30%, free cash flow positive, great balance sheet. So nothing really has changed from, when they reported earnings. So the bullish beeping. The Fed suggested they might hike by 0.5 or 0.75. Should that bring a bear run? And if they do a 0.25 hike, would that be a rally? Would that be a rally in the market? Sorry for the silly question. I'm silly. So so if they do less than what the market's anticipating, that should really be more bullish for the markets in general, in theory. So right now the market's anticipating 50 to 75 basis points, depending on when you check the Fed funds futures. Right now it might be 75 basis points, but if they do a lot less, which I don't think they will do 25 basis points, but if they do, then of course that will be a very bullish catalyst for the markets in general to push higher. So QQQs looks like they are sliding down a little bit, 20 basis points right now. We've got the SPY flat, but not looking super pretty. And then Apple, I think, is one of the stocks that is kind of leading this slowdown, and it's turned red. Great. And then we got Nvidia down almost 1%, just hovering around 170, and Tesla is up 40 basis points, and Amazon also just down about 0.5%. So shaping up to an interesting day, everybody. Hope you all are ready. About minute 30, and we are good to go. Manchester won Liverpool, and we still yet to have a bull market. Yes, the impossible has happened. The unreal has happened. Where are all the Liverpool fans today? So let's hope for 100 basis points. Eminem says, that would be pretty shocking, at least for the market, even though it would be much better for us to get out to neutral and higher very, very quickly. But yeah, the market would definitely not see that coming. All right, here we go. Let's do this. 10-year yields still on the move. They're now getting up to 3.1%. They're definitely creeping up. I don't think we are not talking about the 10-year yields enough, I feel like. We need to. We have them on check. We've talked about the market updates, but they have definitely been creeping up, right? And this is all because of quantitative tightening kind of starting. In my opinion, that's one of the reasons why the yields have been pushing higher, is there's going to be a lot of maturities coming through, and the demand might start to kind of taper off from the Fed. So RM, the vote is over. We had most people expecting the markets to be green today. David, VCSA, I know that you posted something in the Discord. I'll check them out here in just a minute. Let's see where we open. So here we go. Apple opening up at just over 167. Nvidia just over 170. Tesla at just over 890. Amazon continuing to kind of slide down, almost 1% down here on the day so far. And then we've got the NASDAQ here, again, opening pretty flat, 3 basis points. We got the S&P flat, only down 8 basis points, and the Dow is down 14 basis points as well. Energy, though. Energy, look at that. Look at where we got rejected, everybody. We haven't talked about oil. It's crazy. In the last 1 hour since we've been live, I didn't bring up the oil chart. But crude oil, just started trading at 93.75, again, getting rejected at $95 a barrel. Like the high for the day, 95.30. And it's a very strong resistance, even though we're now starting to kind of make these higher highs. So we're definitely going higher than the previous high that we had. And at the same time, we're kind of breaking outside of this downtrend. We are now battling through with this resistance. And this is the last thing I want to see break out, honestly. Like, I don't want to see energy break out. But Shell, BP, we got Occidental, Chevron, XLE, ExxonMobil, all of them slightly down today. Devon Energy slightly pushing higher, but $95 a barrel is going to be a very important resistance for crude oil. So yes, QT adds about 0.75 to interest rates. Yep, that's something that we discussed because they're going to be tapering off close to $2 trillion over the course of the next couple of years. But the interesting thing is the same thing when that happened back in 2017. They only went as far as $600 billion worth of balance sheet reduction before they had to call it quits. So Many analysts and economists really don't believe that the Fed is going to go through with their balance sheet reduction like all the way through, because the market and the economy won't be able to handle that. Because it's really what it's doing. It's just reducing credit. It's just slowing down the flow of credit from the economy, and there's going to be weird stuff that's going to be happening in the markets, right? Once they start kind of really doing it aggressively. So many people just really don't think that's going to happen all the way, but we'll find out soon enough. Have you thought about getting a physical bell? What do you want me to do? You want me to talk about stocks, or just bang a physical bell here at market opens? Yes, let's take a look at the euro and the USD too. Like USD DXY, we'll come back to the QQQs in just a minute. 313 is still going to be that support, but of course the DXY has been on its way higher once again. We did see a big sell-off, but look at that. What an insane rally back higher for the dollar, and that's obviously not great for the overall market. Market becomes a little bit more risk off and the dollar goes higher, because all the global companies, all the international companies, their foreign earnings are worth a lot less in US dollars because of the dollar getting stronger against the emerging market countries. So back to 109, the DXY is, I think the euro is a big component of the DXY US dollar currency index. So if you take a look at USD, so wait a minute, I do have the currency watch list here. Let's take a look at that. There we go. So Euro USD is now just trading at just under 1. I read this really funny meme on Twitter that since the dollar is now worth more than the euro, it's now actually called soccer and not football. That was such a funny meme because it was so relatable, not just from like the sports standpoint, but also from the markets and currency standpoint. But yeah, right now we're still under 1 at the moment, and this of course has just been selling off quite a bit. So just been from 1.22 all the way down to as low as 0.99 now. So it's just been hovering around those levels. It actually did recover back up to 1.035, but kind of bounce off of that resistance, and so did the DXY kind of bounce off of that support here a little bit from 104, 105, and then just starting to push back higher. So getting really gaining a lot of momentum pretty much here. And here we go. Sellers stepping in. What a wick. What a wick at the top here. How many longs do you think got trapped in that wick right at the open? Kevin says I will have time to create some memes. Love it. Love it. So there we go. 313 acting as a support for now. Quick in the live chat, let me know if there's a breakout or a validation. Breakout or validation. So let me know in the live chat, what do you think at 313? That's going to be that support level that we're really paying attention to for now. Pre-market, we've kind of bounced off of that level 3 or 4 times. So let us know. Alberto says moon. Really just going off on a different tangent. Not a breakout, not a validation, Caddy. We're just going to moon straight from here. So Caesar says validation, validation. So far looks good, right? 313. Buyer stepping in at that support. That's good. You just got to take out the high for day, and then there should be some more momentum for the day. High for the day, 314.33. We'll see if you actually do break out above. But let's see what's actually driving this move. Tesla, Nvidia are 2 stocks that are kind of pushing higher with some green candles. Amazon still struggling, down 60 basis points. Apple trying to reverse course. And Netflix also one of the stocks that's pushing higher here, up 27 basis points. We'll kind of run through the watch list here in just a minute, but it's really interesting kind of watching the NASDAQ here on the 5-minute chart. And then we'll kind of quickly switch over to individual stocks. So Dewey says, feel like the caddy is on some kind of delay, missed the open, and is reading the chat messages from like 30 minutes ago. Really? I think it's pretty updated, right? I think I'm reading like the most up-to-date live chat, but I do keep going back to see if there's any comments from, that I missed. Yeah, Oscar says no delay here. So, but yeah, 314.33 is going to be that high for the day. So we'll see if you actually break out over that level or not. So buyers kind of validating 313 for now. Caesar says, Oxy, this stock has to have a lot of people waiting for a dip to buy it. Yeah, I think the Warren Buffett effect is really in full effect for Occidental Petroleum. That thing is up another 1% today, up to $74. I mean, this stock is nonstop, right? I mean, this thing has just been pushing higher and higher on the back of Warren Buffett and, the fact that he's been buying so many shares. Yeah, from as much research that I've done on this company, I think the biggest reason as to why Warren Buffett's pretty much going all in is because of the big turnaround story for the company. They're paying down debt, they're record free cash flow positive, balance sheets improving, issuing a dividend, buying back shares. I mean, they're just doing all the right things, right, at the moment. And that's usually what you would expect from a company that's just literally, when I say swimming in cash, they have got a pool of cash right now coming in because of oil prices that are so high at $90 a barrel, $94 a barrel. So, $4.2, $4.3 billion in cash flows, free cash flows. It's just an insane number. The company's never done that in its history. So, yeah, I think that's one of the big reasons. And the real question really then becomes if this is going to be sustainable, right? I don't think it's going to be super sustainable. In other words, the growth is obviously going to taper off and the comps are going to be this tough. I mean, think about it next year, right? The company's growth, unless oil is at $200, revenue and earnings are just, not going to double from here. There might grow like 20 or 30%, but it's insane how much it's gone up this year and the bullishness from Warren Buffett at the moment. So Letty says, hey, loved your videos on household, retail investors, Dalio, China, Bury, and earnings recession. Giant hug. Thank you. I appreciate that. Glad you enjoyed those videos, and a giant hug back to you. So Swapnil, we have talked about the we have talked about Enphase Energy. I've actually done a video on them as well. So you're happy to check that out, but we'll Benitez get a room. But yeah, so you can check that out as well. But QQQ is coming back to this. Now we're flat, almost getting up to 314.33. That's going to be, again, the high for the day. And pre-market support very well, getting validated at 313 for now. So Tesla really been the driver here so far, especially in the large cap tech space. It's up 1%. Prior to the stock split, again, today's the last day to be eligible for the additional shares. Netflix is up, Meta is up, Microsoft trying to reverse on the day, and then Apple also pushing higher. Nvidia is still struggling, but we are seeing some green candles on Nvidia as well. Peloton up 16%, and that is, where do we have their trade volume and trading view gone? No, I've got volumes over here. That's the volume. This is the volume by price. This is the actual volume by time and date. So yeah, coming back to this, Peloton's up 16% on the back of Amazon partnership. Ooh, there we go. Nvidia's starting to sell off here. Tesla's also. And then Tattooed Chef is up 11% on their expansion with Walmart. Sofi is up 8% on the student loan forgiveness news today. Fiber and Fubo TV pushing higher. Also, Fubo TV has just been so volatile. $4 all the way up to $8, then back down to $4. Then we got Cloudflare. I'm going to be doing some analysis on them very soon. And then Upstart, Snapchat, Upwork, DraftKings, all these up 1%, 2%, 3% right now. Shopify is a good one to look into if you're actually going to be trading. If you're swing trading it, Shopify is a one to really pay attention to because it's back down to that support at $30. So that is a stock that's just been hovering between 30, 40, 30, 40 for the last like 6 to 8 weeks. It's literally not done anything. It's just gone sideways. And then going over to Coinbase. Coinbase is Coinbase up 2.7%. Lemonade, Square, Okta pushing higher. So let's see which ones are red. So we don't have a lot of red today. We got Walgreens down 1.2, Foot Locker's down 1.14, and then yeah, that's it. I mean, all these stocks are down like pretty much 20 to 30 basis points, more or less flat price action on the day. So QQQ is getting a little bit of a rejection there because Apple and Nvidia started kind of dumping a little bit. So lots of indecision, right? Lots of back and forth here on the day so far. Yeah, Uber got an upgrade today. So Uber is up 2.4%. They actually got an upgrade on the day today. So there we go. JMP reiterates Meta and Uber as market perform. So right now they're up to 28.43. Actually, that is not a upgrade. It's just a reiteration for them with the market perform. Market perform is kind of like in line with the market, not really outperforming or underperforming, but in line with the market right now. So we got the Nasdaq up a whopping 9 basis points. We got the S&P that's up huge 2 basis points, and the Dow just absolutely getting crushed down 10 points, 0.04%. 10-year yield is getting up to almost 3.1%. Really fun day for the markets. Yeah, all yields are rising. Let's just open up our yield chart. We haven't looked at that in a long time. This is going to be the yield curves. We're going to come back to this. We haven't discussed this in a very, very long time. I'm happy to kind of bring this back up. So there we go. Switch over to the lines here. There we go. Remove all the technicals. All right, so the difference between the 10 and the 2 remains negative. That spread is negative 25 basis points. The spread between the 10-year and the 6-month remains negative. This is a pretty crazy spread to remain negative. It's actually been creeping higher. Wow, it got down to as much as 0.36%. That's crazy. And then we've got the 10 versus the 5 down also negative 0.12%. So all three important spreads are negative. All three are recession indicators, of course. And right now, the 20-year is winning at 3.5%. Then we got the 3-year yield. We got the 2-year, 30, and then a 5, 6-month, 7, and then 10-year. 10-year is kind of like yielding the lowest out of all the other ones here. And the 3-month. I mean, if 3-month takes over the 10-year yield, it's going to be a joke. It's going to be crazy for the 10-year yields. All right, look at Tesla back over $900 on the day before the split. Definitely pushing higher quite a bit. And that's obviously helping QQQs right now reclaim, almost get up to its high of day. You know, we didn't quite break out of that level. So that is still going to be that resistance for the high of day, 314.33. We'll see if we actually do get some momentum here to kind of break us out there. Yes, so I'll do, are you going to buy any more TLT at these prices? So Spencer, great question. The thing about TLT right now in the short term is that I'm a little bit more cautious considering that 10-year yields are pushing higher and quantitative tightening is going to be starting in September, right? So in the short term, I'd be just a little bit more careful there because as the 10-year yields continue to push higher, that's going to push down the prices for the bonds, which is TLT. So, but eventually, yes, when I do expect the yields to turn back down, come back down to more normalized levels, then yeah, TLT should benefit from that. So yeah, just holding off a little bit on TLT, but eventually I will start dollar cost averaging. And that's also going to depend on how much the Fed tapers off and reduces their balance sheet and how long are they going to continue to go for. So cool, I've actually done a video on QYLD, RYLD, all of these income ETFs. These aren't bad. These are certainly, good ways to do it. So these are mostly income ETFs, right? So if you are strictly looking for income generation, right? If you're not focused on capital appreciation, if you're not focused on growth, if you're not focused on dividends, if you just simply want income, well, dividend because it's got a dividend yield of 11%, but if you're simply focusing on income, that is a decent place to go. If also you don't know how to trade options. So if you're somebody who's looking only for incomes or dividends and you can't or don't know how to trade covered calls or cash secured puts, then yes, QYLD might make sense. But keep in mind that these are strategies that you can employ yourself by selling cash secured puts or selling covered calls to get that 2% per month or 20% per year. That's kind of what we target for. But QYLD pays you 10 to 11% per year, right? And there are very safe conservative strategies to actually do 10 to 11% yourself per year, trading options. So yeah, it's just a matter of what you're comfortable with, pretty much. So right now we're just struggling, everybody. We're just struggling at 314.33. We're just not able to break out over that level right now. We're just, every time you get up there, there's some sellers kind of sitting at those levels, we're just starting to kind of break down in the support level of 313, pre-market low that we got bought at right at the open 5 minutes in, and right now we're just trading sideways. So yeah, lots of indecision. Nvidia is starting to fall further, down under 170 now, down over 1.4%. So if you want to blame a stock, go after Nvidia, because Tesla's doing its job, up 1.7%, but Nvidia is really not. It's kind of pretty much canceling each other out, right? Tesla's gain and Nvidia's drop, and then Apple is just trading sideways. So yeah, right now just lots of consolidation. Paying attention to this right now. So Sociel, SCELH. Let's take a look at what that company is all about. So up 2.88%. Celsius. Okay. Okay. Yeah, I was getting a little bit confused. I was thinking of the different Celsius, which I think is going under on the crypto brokerage side, but this is different Celsius, like actual beverage company. Very, very strong gain year to date, 55%. That is incredible. Okay, so 538 times earnings. Definitely deserves more research. I'm not going to go off of TradingView's numbers, but right now they do show 530 times earnings. 16 times sales is really expensive. It's really, really high. And 541 times enterprise value EBITDA is also very high. Shares outstanding have also gone up quite a bit in the last 6 to 7 years. They've gone from 38 million to over 74 million, so more than doubled in the last 6 years or so. Let's take a look at the balance sheet. We've got net debt, which is negative. That's good. So negative 42 million. That means they've got more cash than debt on the balance sheet. That's exactly what we want. And then gross margins at 38%, net margins under 6%. Current ratio is good. So yeah, just from this standpoint, shares outstanding is an issue, and then valuation is definitely an issue. But overall, it seems like they've got nice revenue growth, turning profitability. Balance sheet's good, so it definitely deserves more research that I would do on this company. So right now also, it seems like it's very overbought, and we actually broke out from this resistance. So we were kind of consolidating sideways, and a very, very nice breakout up to $115, $116. So it seems a little bit on the overbought side right now. So we'll do some more research on this, but not really for me at the moment. All right, so where are we with the Qs? Still very much sideways. Just no price action. Literally none. S&P, look at that. S&P, 15 minutes, 20 minutes after the open, we are at 0.02%. The VIX is definitely coming down, almost 2%. The S&P is not going higher. Correlation's starting to break down. So, all right, I'm still waiting on my video comparing 2018 Fed rate hike to now. I feel like you won't do because it blows your bull bias to pieces. Well, Letty, I'm not really bullish right now, if you haven't figured it out yet. But we have looked at 2018 rate hikes, and to pivot to pretty much pinpoint that sell-off just on the rate hike, I think is a little bit delusional, because there was a lot of other issues that happened back in 2018. So just because the rate hikes were happening is not the only reason why the markets were selling off in the Q4 of 2018. So something to keep in mind. And of course, right now, I don't expect the markets to be higher. That's one of the reasons why we have been raising cash and trimming. Yeah, it's like the markets have one of those gone fishing signs on the door. Literally, I mean, it's just, yeah, just not moving at all. Not really doing anything. All right, so QQQ is finally making some moves here. There we go, starting to approach back above the high of day, starting to break out, 314.38. So now up 7 basis points. Let's see what's actually moving now. Tesla is the one kind of leading the way here. up almost 2%. Nvidia is also starting to rebound. Amazon also positive now on the day. That's really good. And Netflix is up over 1.3%. So pushing higher. AMD now down 1%, more than Nvidia. So chip stocks, semiconductors are still under a lot of pressure at the moment. So if you go over to semiconductors over here, semis, we got almost all of them red, starting with Lam Research, AMD, Qualcomm, Nvidia, Texas Instruments, semiconductors, Intel, all of them selling off. Yes, Swapnil, our ARK Invest trimmed their stake in Nvidia. They did, I think. But anyway, so thank you so much, everybody, for joining in. The markets, once again, just trading sideways, not really doing a lot. And, as I said, we don't have a lot of things to look forward to, so the markets are going to be pretty boring. Just from, a day-to-day perspective, I mean, yesterday was flat. Today, we're very, very flat, not really moving all that much. Volume's really not that high either. So I think everybody's just waiting for the GDP numbers for tomorrow. And of course, the Fed speech at 10 a.m. Eastern on Friday, August 26th, for which I will be live also. So thank you so much for joining. I really appreciate it. Make sure that you drop a like and, of course, subscribe to the channel if you haven't already. And, of course, Patreon, Discord link is going to be down in the description below if you want to join. And, of course, appreciate the cool graphics over here. So again, subscribe, Discord, Patreon link is going to be down in the description as always. Happy investing. Hope you all have a great day, and I'll see you guys in the next live stream. Take care.